My name is Jim Townsend. I'm the state representative for the 26th District, and I'm so proud to welcome all of you here to the Boys and Girls Club of Royal Oak to talk to you about tax equality. And before we get started, I just want to thank, first of all, the Boys and Girls Club and Brett Tolander, their wonderful director, for allowing us to use this great space and to, here on Tax Day, talk about how we can make our tax system more fair here in the state of Michigan. So I'm going to turn it over to a couple of my colleagues, but I first want to recognize all of my colleagues who have come here today. It's a really terrific group, and it signifies just how much support there is for this initiative, for the legislation that we have introduced, and every single person here has co-sponsored to create tax equality. And by doing that, we're talking about creating a graduated income tax in this state. So I'm going to just quickly introduce Julie Plawecki, who's a representative from Wayne County, Jeff Irwin from Washtenaw County, Robert Wittenberg, who's from right next door in the 27th District here in Southeast Oakland County, Chris Gregg, who's from the Farmington Hills, Farmington area. We're going to introduce Randy Block in a moment, and Frank Librati, who's also from Wayne County. These terrific representatives have done a great job in working together with me to develop this legislation and to co-sponsor it, and we're going to talk to you about it here on Tax Day. So I'm going to turn things over to Jeff Irwin, who is going to talk about what tax equality means and why this is such an important thing for our state to be doing at this point. Jeff?
Thank you, Representative Townsend, and thank you for welcoming us to your district. This is something that Representative Townsend and I have been working together on for a long time. When we first got to the legislature in 2011, we were seatmates. We talked a lot about the unfairness of our tax system, how our tax system charges higher rates to lower income individuals than the rates charged to higher income individuals. Lower income families pay a greater percentage of their income in taxes than higher income people do. And we were talking about how to work on fixing that, and Representative Townsend has really taken the lead on developing a great plan to provide greater equity in our taxation rates, and also to give a hand up to the lower income and middle income families that are paying more and more of the freight for state government these days. So not only have lower income residents been paying a higher rate, they've also not seen their income increase. Here in Michigan, the median household income has fallen by 25% since 1999. People are working more, people are working longer, and the purchasing power of their income is even less. And on top of that, since particularly when Representative Townsend and I arrived in 2011, Republicans have been systematically raising taxes on low-income and middle-income individuals here in Michigan. Many of you probably know that they eliminated a good portion of Michigan's earned income tax credit, and that's going to cost your average low-income family about $400 a year in increased taxes from Republicans. We all know about the pension tax, which was imposed, which is bringing in hundreds of millions of dollars on the back of seniors with fixed income. We know that the per-child deduction of $600 was eliminated. The Republicans eliminated the ability to deduct charitable giving. All of these increases fell on the backs of low-income and middle-income families. And what happened to those at the higher end of the income scale? Republicans have been systematically lowering their taxes. Michigan is 48th in the nation for having the most stilted tax structure, a tax structure that benefits businesses and puts more of the burden on people. So to say that in a little more clear way, Michigan is only beaten by 2 states in charging a greater portion of their tax rate on individuals rather than businesses. When Representative Townsend and I first got elected in 2011, Michigan brought in a little more than $2 billion a year in business taxes. Just last year, we brought in about $200 million in business taxes. Business taxes represent about 2% of our general fund, when they used to be about 25% of our general fund when we got there. So there's been a dramatic shift in who's paying the taxes and where the burden to pay for our roads and our schools and our public safety programs, where that burden is placed. Under Republican leadership, that burden has been placed more squarely on the backs of working people. And we want to change that. And to talk a little bit more about how we can bring in more revenue to support our schools and our roads and our cities and our public safety needs, but also talk about how we can do that while lowering the tax burden on most Michigan people, while lowering the tax burden on working people and bring in more resources. We've got a plan for that. And to talk a little more about the details of that plan, I'm going to introduce Representative Wittenberg.
Thank you, Representative Irwin. Nope. Try not to talk too loud here. My name is Robert Wittenberg, state representative from the next district over, Huntington Woods, Berkeley, Oak Park, Ferndale, Pleasant Ridge, Hazel Park, and Royal Oak Township. So I appreciate, I can do that quickly. Appreciate Representative Townsend hosting us here today, and appreciate his leadership on this issue. This is something, we could talk about term limits another time, but unfortunately we lose some great leaders here, and this is something, we have some freshman reps here that want to pick this up and continue working on this. This means so much to all the residents here in the state of Michigan, and that's why we're all here today supporting you. So I would assume all of you are here because you probably wonder, like we do, what percent of income you pay in state and local taxes versus some other people do. Our system for raising revenue at the state and local level is complicated. We have property tax, sales tax, excise tax, fuel tax, and the income tax. So what's the bottom line? When we add it all up, what percent of your income do you pay in state and local taxes? Now, that depends how much you earn per year. In Michigan, the more you make, actually the lower you pay a percentage of your income. And that sounds pretty unfair to me. When you add it all up, the bottom 80% of families, those making $100,000 a year or less, contribute 9.2 to 9.5% of their income, while the wealthiest 1% contributes only 5.9%. So why is it unequal? Why is it so unequal? The wealthiest 1% contributes far less than everyone else because Michigan relies heavily on regressive taxes. Sales tax, excise and property taxes that are disproportionately impact the lower 95% of families. There's no reason why a police officer or a small business owner making $50,000 a year should contribute nearly twice as much of their income as a billionaire. We can equalize our tax burden by establishing a graduated income tax. And that'll cut taxes for 95% of Michigan families, and it asks the wealthiest to contribute the same percentage of their income, tax fairness. It would make a real difference in the lives of Michigan families who have been getting hit from every angle, which Representative Irwin referred to, declining income, reduced benefits, rising costs, and the disproportionately higher taxes. Under this plan, a family making $80,000 a year would save $600 each year, an 18% tax cut. This plan is truly progressive. The less you earn, the greater the percent of the tax cut. Now, more than 4.4 million filers will receive an $830 million tax cut to increase demand, stimulate economic growth, and create jobs. And additionally, this is another really important stat. 89% of business owners would receive a tax cut. That's a pretty staggering stat. The top 5% would contribute their equal share, and listen to this number, generating up to $760 million in new revenue. Again, lowering taxes for 95% of people in the state, yet generating up to $760 million of new revenue to help with our crumbling roads, which unfortunately won't be fixed anytime soon, provide our children and grandchildren with the education they deserve, and lower tuition rates so our children and grandchildren aren't burdened with unimaginable debt.